Okay, we are live. Hello, everybody. Welcome back to Palantir Weekly. This is number 20. We are here today. Me and Sachin. Chris cannot be here today, so we're here with Dom, and we are going to be analyzing all things going on in the world of Palantir. Before we get to that, we got to talk a little bit of the macro, talk a little bit about what's going on in the actual markets themselves. This week was a very interesting week. We had inflation come out, reading to 9.1%, which was pretty wild. We did not expect 9.1%. So as a result of inflation coming that high, a lot of different things happened in the markets. And interestingly enough, most of the markets kind of didn't care about it, and they kind of just bounced on it and decided to factor in that the Fed may raise rates. Jim Cramer said that this may be peaking because commodities are going down. So lots of different things going on in the macro, and it's going to be interesting to analyze. Let's start off with you, Sachin. What was your take on the inflation reading, and why do you think stocks kind of bounced up even though the print was high?
So I think everybody expected inflation to go up. The reaction comes like 9.1, but the trend is always been up. The energy has been high. There's always like 2 to 4 months kind of delay. Like by the time you consume the energy, you produce the goods and it goes to the people. So I would still expect the inflation to stay high at this particular point, despite like there has been some reduction in oil price, but it's not that much. And in the meantime, like everything else in the supply chain has also pumped up in the pricing. So at this point, yeah, 9.1, I would say government has done pretty good job somehow to publish this number below 10. I'm pretty sure this number is way above 10 now, but with all the financial engineering and everything, they are just trying to keep it 9.1. You can see the pressure. I mean, Biden was fisting bump with MBS, the same guy he wanted to make pariah 2 years back in campaign. So I mean, yeah, the heat is on, and now the challenge at this point is that you cannot just get it back so easily. I mean, you have to increase the interest rate, you have to ease the supply chains, you have to ease the oil price, and this is something that can happen over weeks and months if policies are right. So we are not there yet.
Sorry, I was muted. I meant to say Dom, your thoughts, but I was muted. Go ahead, Dom.
No worries. Yeah, I mean it's a number that is looking backwards, right? Like we're looking back at what has already happened, and so I know we're starting to see some of the gas prices come down and everything like that, but we still can go lower. And specifically for those of us who invest in tech stocks, I'm of the belief that we will have a 100-point rate hike come at the end of the month. So I believe that the market will overreact because they actually lowered the chance of a 100-point rate hike at the end of today, and so the market got excited and went green at the end of today. But in order to really get a hold of this inflation, as Sachin was saying, we still have much more to go. And at the end of the day, I mean, if we're not going to try to be energy dependent, gas prices are still going to be high. And that's going to trickle down and have a lot of different effects. I think in earnings season, which is just really kicking off, I think we're going to see a lot of companies report disappointing earnings results, not necessarily Palantir, but we'll talk about that because there are some concerns there. But just overall, I think we're going to see another big drop, and that's what I'm waiting for, I guess, technically timing my DCA, because I think we still have more pain to go. But I think Q3, Q4, we'll start seeing a slow uptick.
Yeah, I agree. It's very, very interesting to see what's kind of going on. There's a little bit of a disconnect between Main Street and Wall Street, just in terms of exactly how to make sense of a lot of the things happening. In terms of the Saudi Arabia, I love that in the comments, someone said, Sachin, how many Palantir do you have? He's like, a lot. In terms of the Saudi Arabia stuff going on, so I literally just before this podcast started, I was watching a documentary on the Prince of Saudi Arabia and the murder of Jamal Khashoggi, and only because everything was in the news today about Biden going to Saudi Arabia, the fist bump, and it really, I guess, inspired me to do more research on what happened in 2018 because I didn't do too much digging back then. Sachin, what are your thoughts internationally on Biden having to compromise the freedom of speech, human rights stuff he said against Saudi Arabia with the fact that he needs more oil? And do you even think meeting with him and compromising the pariah stuff he's talking about will do anything? Because even if OPEC pumps more oil, if we don't have refineries, like, is it really going to make a difference in terms of oil prices?
So, I mean, there are four different angles here. The first angle is what it says that whatever Biden has said during the time of election, making pariah, I think that was, it turns out that was more an appeal for the voters rather than any sincere thought that, okay, can we really get it done? I mean, if you are working on principle, you do it whatever the price is. The second thing is that even in a political arena where, I mean, principles can be compromised at any time, I mean, this was the last strategic thing they wanted to do, that they are doing it because literally there is no other option for them. Okay, the third part is, see, the relationship has been cold, but that's a difference between Saudis and the Bidens are thinking 6 months ahead, Saudis are thinking 10, 20, 30 years ahead. So they know, okay, I mean, they know that if you are going to have a longer relationship, there are going to be times when things are tough, but you need to play mature. So yeah, I mean, they could have given him cold shoulder, but they just gave him enough so that they can bring him to Saudi. Now he is visiting them, they can sit. And you saw that how timid Biden sounded after meeting Khashoggi. Okay, and in a way, like, the fourth angle is that, see, there is this idea of like a social justice, social judgment. Okay, and people judge people on platforms or on media, but what we have seen is like where it has taken world in last 5 6 years. So I hope it should be a start where people have to think like, okay, let's start thinking a little longer term. Okay, there is going to be a lot of backlash, especially from like extreme left, um, portion of, and that's rightly so, because he's told them that he will do this, he will bring justice, and he has not brought it. Okay, I mean, we don't know like what happened exactly in that incident, but at the end of the day, Jamal Khashoggi was a US green card holder, if I recall correctly. So he was a resident there, and that gives a message that up to what extent a country can save or not save or pursue justice in different ways. In a longer picture, okay, the most important point is that how much barrels he get from OPEC now, because that is this is only the one thing he's there. This whole idea of like Middle Eastern trip and all that, I mean, you cannot just go Saudi and come back. Okay, when you plan for a Middle Eastern trip, you have to show, okay, I mean, yeah, Saudi is just one of the stop I'm going. But to be fair, the only thing that is troubling the administration is inflation and the energy prices predominantly. And yeah, Saudi is one country that can help. I mean, US can help themselves, but that is one door that Biden has shut down. Back to you guys.
Yeah, I mean, we won't belabor the point very very long, but all of the things that we have for the most part have been self-inflicted, from inflation to overspending and stimulus, and even still the administration continuing to want to spend more money to try to solve inflation, which is counterintuitive. Um, so I think we just gotta to wait this out, and hopefully, eventually, we start re-drilling in our own backyard and start admitting that this is a need.
Yeah, it's very, very interesting. I saw one of the key spokesmen for the Saudi Arabian monarchy today talking to a CBS reporter saying, "Look, even if we give you guys more oil, like he said, you don't have the refineries, so it's like it's not really going to necessarily change the market." But nonetheless, Biden's kind of at this point he has no other choice or option but to see if we can get OPEC to pump out more oil. So it's going to be interesting to see what kind of happens. Along with commodities coming down, we're seeing real estate prices come down as well. There is a world in which maybe all of this comes together and we get a little bit of a decline. I want to ask one more macro question before we go to Palantir. Let's say inflation has peaked, right? Let's put that out there. And let's say commodities do come down, oil prices do come, and things start to get better. Obviously, it would seem likely the market rallies from that because we're turning a tide. Do you think if the market kind of rallies back to April 1st is high on the S&P, which is when the 10-year and 2-year first inverted, which is about 454 on the S&P, do you think we're kind of in clear waters, or do you think any rally that happens as a result of some macro dynamics over the next couple months will be sort of a bear market rally and then lead to another crash? Like, do you think we need to have a real true recession for things to get for us to move forward, or do you think we can move past this and this recession will only be technical but not as bad as 2008?
So, I mean, in my view, we are not there yet for market to rally, and there's a very simple reason for that. That even inflation peaks. I mean, peaks means, or even if it stops, that means still like next time we go, it's like 8.9, 8.8. The difference between interest rate and inflation is still too high. So Fed still has no option but to increase the interest rates. Okay, even like slowly the inflation comes back, we still have to see interest rate at some point like at least 4%, 5%, because that's the only way you can get, and whatever the pile of the debt sheet they have. So I don't think stocks are there to rally yet. My understanding is that indexes will break down. So at this phase, when the commodities break, I think the companies with higher volume weights in indexes are at more risk rather than the companies which have already crashed a lot. They can still crash, but they are they're close to bottom in most of the cases, as long as for the good companies are concerned. We still have to see probably some more bankruptcies to get it. We haven't seen the crash in the housing market yet. I mean, at least the housing market has to soften. It's too hot. So at this particular point, before we see the rally again, these things have to settle. If these things don't settle, rally could be unsustainable in my view. Back to you guys.
Yeah, well said. Very well said, Sachin. Took the words right out of my mouth. Exactly to what he's saying. We haven't seen the housing market crash, and we're going to have to see that happen, right? I mean, you're at a point where you can't afford a house, and the renters know this, and renters are increasing the pricing so astronomically. We're at this inflection point where we need to get these houses built, and so eventually those rates or those prices will have to come down. But interest rates are also so high, so we're going to have some eventually, when we get to that peak, to have some quantitative easing to come back and bring those rates closer down to get to that inevitable 2%, which is what we're trying to get back to, in end of 2023, 2024, whenever that happens. But there's a lot of things that are still in motion that haven't fully, the other shoe hasn't dropped, right? Like you're still seeing employers, offering crazy money to people for coming on board. We still have a low unemployment rate. We still see people vacationing and going YOLO and going to Europe and going everywhere. You're going to start seeing after summer, things are going to start tightening back more. And I think, once we start seeing some of those other things happen, I think the first next step is we will probably see some of the larger quality names, like Sachin was saying, have a bad earnings report. The market will react, the S&P will contract, and those who've already been beaten down so much, 80%, I mean, it's how much more can they go, right? Not that they can't go lower, but we're going to start seeing some quality, like Apple. I've seen numerous articles that people are saying Apple's going to like just drop off the face here with this earnings report. So I think we haven't seen a lot of things happen yet, and this is when people can get kind of impatient because these prices are great. Like buying stocks right now for quality companies generating free cash flow, you'll be happy you did 10 years from now. But if you're experienced and you've been through one of these or two, you realize don't just jump at the first great price you see because we still don't have the macro issues solved. Nothing, there's no positive catalyst that we see that will sustain everything, if that makes sense.
I meet a lot of guys who say every time, like when there's next time there's a big crash, we'll go all in. Guys, this is a big crash. I mean, and when I talk to these guys, they are saying, "Oh, I don't want to invest. I want to see how the market behaves." These are exactly the guys who will again say in 5 years down the line, "Oh, we could have gone all in. That could have been that could have been a good move." So just be sure. I think it's better to think ahead that what will you do if the market goes down and what will you do if the market goes up, because how it's going to behave, we don't know exactly. So having your plan ready is actually a better strategy at this point.
Yeah, I've been using this time to really, obviously we know we all three here love Palantir, but just diversifying the portfolio. Really, what are my highest convictions that are generating? I've really focused on who's generating a lot of high free cash flow with revenue growth and high operating margins, net profit margins, and revenue growth. And so when you mix all that together, you have some sustainable competitive advantages that can produce some long term gains. You know, companies like AMD, Nvidia, um, you know, Tesla's going to keep growing their free cash flows. The trade desk, you know, so when you start looking at those, um, I think one of the lessons learned in the last couple months is I went with a lot of smaller caps and mid caps and didn't have to. I could have went with much larger blue chip companies or in a high mid cap companies. And I know the law number says that they shouldn't return great returns, but there's some companies like Microsoft that are continuing to grow at astronomical rates.